Hello, everyone. This is Dan Gramza, and welcome to Gramza Market Studies for Thursday, October 15th. And you probably noticed that you're looking at some different charts here in front of you. Well, I had a little technology issue today, and from a trading perspective, you always want to have some type of backup, and this is another system that I look at. So, with that in mind, let's start with these stock indices, and these are across the stop: the S&P, Nasdaq, Dow, and the mid caps is what you see up here. Let's go back to our NASDAQ market that we've been looking at. And across the board, we did get some follow through today. That was the kind of behavior we were looking for. We still have some more fundamental things floating around out there, and we'll see how that sorts out in terms of the market. But right now, correct type of behavior. Ideally, for the NASDAQ, we want to see a close over 1760 by Friday. That would be the objective here for this market. So that'll be important. And when it comes to well, actually right here we have the currencies. Let's talk about those. We have the Aussie dollar is still strong. Let me move that up a little bit so you can see a little bit better. That market looks good and healthy. So that has all the right pieces in place. We're seeing buyers resume their activity there. And the same thing when it comes to the British pound, a little bit of follow through there. The Canadian dollar also continues its journey. Nothing telling us to stand aside there. The euro firmed up a bit as well. These are all healthy signs. It makes sense the way these currencies are behaving. So we have a weaker dollar. We have stronger stock indexes. Japanese yen is still struggling, trying to figure out what it wants to do. With the strong rally that we've seen, or the weakness in the dollar, we are seeing the yen back off. A lot of carry trades kick in when you see some of this action. And I think that's part of what we're seeing there too. Well, so we're looking for some bearishness to come into the Japanese yen if these other currencies stay strong and the dollar goes weaker. Canadian, well, actually, before we talk about that, the notes. Let's talk about that market. In the notes, we've gotten low enough to find a little bit of buying, a little bit of follow through in that one. So kind of an interesting setup. The bonds are very similar. Let me just show you that as well so you get an idea. Bonds have a very similar setup. So we are looking for some follow through in those markets as well, a little bit of strengthening. But I'd be very cautious about these interest rates. Again, I think that you have this bearishness also overriding the action that we're seeing in those markets. So we're looking for these to come off further, actually, to the downside. Now, if you look at the energy market, or actually let's look at crude oil. This is crude oil right here. We are looking, and it's up to the magic $75. We are looking for follow through. The behavior here now is going to be critical for that market. And it's going to be interesting to see if indeed it can maintain these levels. We've kissed them or through them, but can it really hang in there? The next 2 days should give us some ideas about that. And right here is natural gas. We're looking for continued weakness in that market. Boy, what an interesting market this year. It just fascinates me. Gold is actually slowed down here a little bit. We are seeing some evidence that sellers are coming into that market. Same thing for silver. So we need to be cautious on the long side for those markets. And copper. Well, copper, just like I said yesterday, just doesn't really know what it wants to do. We're seeing the beans get high enough to find some sellers there as well. So we need to be cautious on that front. The market's digested the news and it's waiting for something else to react to. We're seeing the same kind of behavior in corn and in wheat. Market's gotten high enough to find selling. One of the things that fueled some of the action that we see up here in the stock indexes today was some of the reports that came out in JP Morgan's earnings and, a few other things. We're in that season. But as we've talked about before, and I know a lot of you have heard this because you've been looking at these for a while, but for those of you who are new, this action that we're seeing makes sense. In other words, if you look at 74, 87, 89, 2000 to 2003, this last move we've had, there are certain behavioral characteristics you look for in a market. Right now, the market is behaving correctly in that the market is outpacing the economy. It should. Companies, what do companies do when they have these crazy times that we just went through? They downsize. Unfortunately, a lot of people lose their jobs. The company becomes leaner. they become more profitable as a result of that. Investors look at that and they say, oh my gosh, this company's doing well. I should put my money in. And that expands the market again. Then the companies get more money, they hire more people, and we're right back to that cycle. But there's a lag between the two. So I know people look at these markets moving and they say, how can you be bullish when there's so much bearishness out there? And that's true. Has this rally occurred on the highest volume? No, it hasn't. But I think we still have the right pieces in place. The market overall is behaving properly with respect to where our economy is. And it's towards the end of this year and the first quarter of next year that I think it's going to be critical. But right now, everything seems to be appropriate. Well, this concludes today's market studies. I hope you found a few ideas helpful. I am looking forward to being with you again tomorrow. And in the meantime, take care.